All right, and we are live. Welcome everyone, and welcome Richard from TradingWarz. Nice to meet you, brother. How are you?
Thank you, brother. Thanks for having me. Um, I'm just driving back, like we spoke about a little bit offline. I'm from Orlando down to Hollywood. Um, as most people know, I'm a CPA by day, so I'm in the consulting world, helping Fortune 500 companies, and then I'm a trader also. So I try to have a lot of my trades automated, and I'm just really excited, really grateful to be here. I very much appreciate this. I'm just happy that my message is getting out there, and I just want to add as much value to everyone that I can.
Right on, right on. So you're working a full time job while doing this, and you were talking about having your trades automated and whatnot. Now, how did you decide you were going to get into trading while working full time? How did that work out, and how
That's
is that
that's a great.
currently working?
So back in my auditor days, I used to audit the finance sector, asset management companies, private equity, and I got kind of inspired by that process, looking at how they were investing in different companies and had different portfolios and different funds and stuff like that. And that really, really inspired me. But that being said, I was still very, very skeptical. As a CPA by nature and auditor by nature, I'm just skeptical. I was very skeptical about trading. I never thought I could make money. But I had a very close friend, still do, who's my mentor now. We went to school in high school together, and we kind of reconnected. And he told me that he basically dropped out of university and was trading full time, trading futures. And I was just didn't believe that could be possible at the time. But he sat me down and we talked about the numbers game behind trading, and that's when I realized that it could work. And the numbers games, to me, it's pretty much about risk management. I also learned that when I was working in the field. Basically, if you have a 2-to-1 risk to reward, so let's say you're making on average $200, you're losing $100. You just need to win 34 out of 100 trades. That's all it does. That's all you need to make a profit. So that's what really inspired me to say, hey, let me give this a shot, because it's just a mathematical probability based thing. It's not about gambling. It's not about watching the news and pump and dump and all that stuff. So that's what got me really into it about 7 years ago. Started off as a futures trader, trading ES and MES. I did really well. I took an account from 5K to 80K, doing that. And then I just wanted to keep growing. I heard a lot about the option game, guys like yourself and Data Warrior and in the community. And I wanted to see if I could learn it and could make something out of it. And that's where I came up with my strategies. And that's kind of what led me to where I am right now. So now I'm trading everything pretty much: futures, options, stock. And I like it that way because I want to stay diversified and I don't want to have too much of my money into one thing.
Right on. Makes perfect sense. Now, you're saying you're trading futures, you're just trading normal equity, you're trading options. Is
Yes,
your
sir.
trading style consistent throughout all of these, or are you trading each individual equity differently than the other?
Yeah, so everything has to be the same for me. It has to be the same because if it's not the same, to me, it's gambling in my head because I'm very structured. So all of my trades must start with an inside bar or Fibonacci, one of those. That's all I've been trading in my journey, and I'm not going to change it because it's making me money. And the only thing that changes for me sometimes is just the way I scale out and take profits, and that depends on how much risk I have on. That depends on the overall market. But generally, when it comes to, let's say, a day trade, every single day I look for inside bars, double inside bar, my holy grail pattern, any of my patterns. It must be that on the daily chart first. If it's not there, I'm not going to trade it. And I don't care what's going on in the news. I don't care what people are talking about. I just do it because I need structure. Otherwise, I'll be chasing things and I don't feel comfortable doing that. So basically, like for the daily setups, I post 4 picks a day for free on my Twitter, and those are all inside bar closes, or double inside bars, or Holy Grail, which is an outside bar plus an inside bar. And basically, what I'm looking for there is I'm looking for stocks that have been consolidating. That's pretty much it. Because I love to come in the day after consolidation because I know premiums are getting hit with that consolidation, and then from there I have pretty much four ways to enter the trade. So when I enter the trade on the day, from a day trade perspective, it's either I'm going to use the opening range breakout, which is the breakout of the first 5 minute bar. I'm going to use another inside bar, which I call fractal trading. or I'm going to use a fib. And then that's basically my three go-tos. And then if I don't do that, I have the normal breakout that most people are familiar with. So like this level, I'm going long. This level, I'm going short. So that's my structure for the day trades. For the swing trades, everything on the weekly chart must start with an inside bar or one of my patterns. And what I do in order to get an edge in swing trading is I look at timeframes that normally you don't hear about. So I'm on the 1 week, 2 week, 3 week, 4 week, 1 month, 2 month, 3 month. I'm looking for those names that have been consolidating for a significant amount of time. And then that's how I come in using automated options. Or if I don't like the option spread, I'll just come in with shares.
Okay. All right. Now, this is really interesting, and I want to go ahead and highlight this aspect of your inside bar trading. A lot of people, when they discover a new aspect or a new indicator in trading, for example, let's say someone who has never played with inside bars, goes sees your profile, learns about them, and starts looking for inside bars on his favorite names. Now, you say that every trade has to start with an inside bar. I want to highlight a fact that a lot of traders don't understand that indicators, to have greater success, they need confluence with each other or confluence on multiple time frames.
Exactly.
So for you, what are you justifying beyond an inside bar to look at a stock? You said you like to look at something that's been consolidating, but a lot of times, or not a lot of times, we'll say 50-50, a name is consolidating, it'll print an inside bar, it'll break the inside range, and then, it'll have a few cent move. Yeah. And not really that great for option trading. So there's a lot of other aspects that people are missing. Do you want to go ahead and shine light on some of them?
Yeah, so I have a scanner. So I have a scanner that I use in Thinkorswim. So I'm not just I am looking for inside bar primarily, but I'm also looking for I have a filter for volume. So it's got to be above 1 million shares traded on the daily chart for me to consider it.
And that's the day before.
The day before, correct. Okay. And then when I from there, I actually play very similar names that I play often. So, I play market leaders. So as an example, if I go to finviz.com, that's one of the first resources that I started with. They have the the heat map and the market leaders by sector. So basically, I focus on those leaders in the market, the ones that have the most shares, the most size within that sector. And basically, over time now, what's happened to me after 7 years, I pretty much know which ones can move and which one can't based on my trading over the years. And I also actually have a lot of back-tested data. So when I first got into trading, I was a very oriented around back testing, and I spent thousands of hours doing that. So I know the names that will work better based on my style. And some names I just blacklist them. I don't trade them at all because I know my style with those bars, it's not going to work. Right. But that being said, with the fake outs that happen, I also have a strategy for that. And I do pick names that I see that tend to have false breakouts. I call it the Fibonacci reversal, right? So I have a whole book on Fibonacci that I wrote a few years ago because that's what I learned primarily in futures, that everything is pretty much a fib. If it's not a fib on that time frame, it's probably a fib on another time frame.
I'm sorry, you said you wrote or read?
I wrote a book. Yeah, I have a book.
Do you want to go ahead and share with the viewers where they can find it?
I could have probably brought that up. But basically, I wrote a book called Fibonacci Fundamentals. And it goes through the concepts that I created called the morning leg and the afternoon leg. And basically what it is that from trading futures for all those years, I've started to see that, within the first hour of the day, you'll usually have like a push in one direction, up or down. Okay. And then from there, we can measure that push using the Fibonacci's and using certain Fibonacci, like the 50, the 618, 786, and the 886 as areas to come back in when that pullback happens to get a great risk to reward. So it's nothing's 100% accurate, but what I like about the fibs is it just gives me good risk to reward. So sometimes if I do a good fib, I can maybe get 3 times my money. If I do that, then I don't really need to win that often, right? I only need to win like 25% of my trades. So that's the morning leg. And then the afternoon leg is a concept where basically it comes in around 1 or 2 o'clock. There's a range. There's a full range on the day usually established by that time. There's a low and there's a high. And then you basically measure that range and you use the halfway mark and the 618 to basically play a position into the close. So that's what I wrote about mostly in my book. And then there's a concept I call the Fibonacci reversal. And what I do here is I actually measure the range of the previous day. So, when you have an inside bar range, you're going to have a low and a high, and you're going to have a high and a low, right? So it depends which way you want to project the fib. But basically, if you draw the fib from the low to the high, and I project it using my extension, so 10% is something that I back tested and I found that really works well. The 0.169 and the 282, and then all the way up 50, 618, etc. So what I do with that, right, is I project the fib, and then I say, okay, if we're breaking out right now, do I see resistance on this fib? So let's say we break the previous day's high. I come to the 0.169, and then I get a signal. Let's say I get an inside bar up there. Then I can take a chance on the reversal trade, right? And that's actually something I did with Space on Friday. We had the breakout of the level, and then at the top of the range of the day, the high of the day, we had an inside bar. So that gave me a signal to try for puts. And all I'm doing, right, is like I'm not 100% accurate. I mean, as long as I'm above 40%, I'm happy. And that's kind of what I do. I just play those same strategies over and over and over again, and I really focus on managing my money, and I focus on the risk. I never put in a trade more than 2% of my capital, never. And that's why I love options, because whatever I put in, that's my risk.
Okay, so regarding the Fibonacci retracement, I like that. I've been experimenting lately this past year with the 50% retracement off of news. Yeah, off of news-based moves such as FOMC meetings. Any news pops that might have in individual tickers. Yeah,
all the time I see that.
I'll let the first candle go. Switch over to the 1 minute even. Look at that 50% hold and go in for the second leg up. I love it.
And then just talk a little bit more about the fibs. Like I don't talk too much about it because it's very advanced. So I like to stick with just like simple things like the inside bars and stuff, because traders can just see it. I have my own indicator that I created. It's called the TradingWarz Golden Indicator on TradingView for free. Anybody can put it on their chart. All you have to do is add that indicator to your charts for free, no charge. Basically, I like starting there first with traders because it's very simple. It highlights it in yellow if it's an inside bar. It highlights it in white if it's an outside bar. So you can just start trading there and start practicing there. And that's why I don't really talk too much about the fib, because it's advanced. And I know a lot of my community is new. So I want to get them learning the inside bars, the outside bars first, and then we can add the fibs on top of that. But, just to add on to what you're saying, brother, is the fib is happening on all time frames. That's what makes it very powerful. So, for example, when I get a weekly inside bar close, let's say one that I took recently was Oracle. Okay, so Oracle, I got a weekly inside bar last week. I got in with calls. And if you look at the candle on the weekly chart, you can take the Fibonacci and measure from low to high of that candle. And what you'll see is that the algorithms that are trading these Fibonacci's are tagging it on the 50%, so the halfway mark of that week's range. And that's where they're loading up in some of their calls and some of their shares. And that type of information is very, very useful, because I also use it for my stop losses. So for example, like if I get Oracle, I see the algorithms filling at the 50, that's where my stop will be. Because I know if it turns around from there, then there's probably going to be a flush down, and that's where I want to get out if I'm wrong.
Right. Okay. Right on. Now, you started this interview talking about how you love to see everything in life as a mathematical probability. Yes. Now, this sounds like you got the emotional / psychological aspects of the market down to a T. What helped you essentially turn into, I hope you're not insulted by this, but a robot while trading? What helped you unlock that click?
110% back testing, because back testing shows you what the results are without emotions. And every single time, if you trade without emotions, from what I've seen based on my results and my testing, you always make more money, because the human emotional part of it is it's a mixture of greed, fear, and that's not a successful recipe for a business. So for me, trading is a business, and as a business, I'm just looking at what's most optimal, and the most optimal is trying to be automated. And I've seen that through back testing. So for example, like if I automatically take targets and I test that versus me trying to move my stop loss up based on what I'm reading on the chart, I notice that, hey, just taking a target makes more money because there's so much human error potential as well. And then just trading in real time, as trading in the market, I see anytime I break my rules that I've back tested, I don't make as much as I would have if I just stuck to what I know works. And that comes from just having thousands of hours of back testing and replaying the markets. That's what I did in the beginning to really feel comfortable with what I'm doing. Because once I saw that it made money historically, that gave me confidence to push forward.
Right on, right on. And so this kind of comes up to a little message that I try to hammer into members about consistency. You know, your method obviously works beautifully for you, and it works because you're so consistent with it. However, there's a lot of traders where,
Correct.
let's say, they will be as perfect as you for a week or two, and then one day or 1 week, it doesn't even have to be a week. One trade can make all the difference if you're not managing risk properly. Let's say you over positioned, and now since you're over positioned, you see this position go against you, trigger your stop. You're like, okay, well, maybe if I loosen around the stop, maybe if I take this back a little bit, and before you know it, that single trade has undone all the minor profit taking you have done consistently along the way. What
Yes, sir.
what
100% agree.
is the major key that triggers traders into falling into that pit of despair, and how can they dig themselves up?
Well, that's a great question. And the first thing is that everybody goes through that. I've been through that. I'm sure you've been through that at some point.
Mm-hmm.
It's a part of the game. And you can only learn through experience. You have to be in that shoes. You have to blow up an account or lose significant money before it sticks in your brain that you need to follow your rules. And a great example of this is actually, so on my website, tradingwarz.com, I have all of my swing trade results, all of them posted, every single one. And what I do with my swing trades is the weekend before, like today. So yeah, actually on Friday night, I posted the setups that I'm going to take this week. So that's the automated style. But what I'm trying to get to with that is if you go on my website, you'll see in April, I had a bad month, a really bad month. And if I had given up right then, I would have
Before you
not gotten
continue, let me
anything.
go on to your website so viewers can
Yeah,
go ahead and see it. So that's
yeah, tradingwarz.com.
tradingwars.com.
And then the first page should be the swing setups there. And you'll see all my trades there posted since January to now. And you'll
Mm-hmm.
see, like, if you go around April, I have,
April.
I think it's April or is it March? It's one of those months.
Okay, we're here. We're here. It was
Yeah.
March. There we go.
Yeah. So basically, I lost money that month.
Mm-hmm.
And since then, I've been on a great streak. And if I had given up right there, I wouldn't have gotten these results. And that's what I'm trying to tell. That's what my message is to people is that you have to do the back testing to trust your strategy, first of all. And then when you actually go through the back testing, you'll see you have drawdowns. It's natural. It's actually math. It's just math. And any mathematical probability-based system, you're going to have winning streaks and losing streaks. So that's gave me the confidence to get over that losing streak that I was going through. And now I'm reaping the results. But if I had given up right there, it would have been over. So that's why I tell people, think about it like a business. Okay, if Walmart and McDonald's, if they have a bad week in sales, are they going to shut down? They're not. You know what I mean? Like they're gonna keep pushing forward because they know that the business is gonna have up and downs. It's gonna have cycles. And really, for me though, the key was always back testing because when back testing, you can clearly see, oh, I had a 7-streak loser, a 10-streak loser. So when it happens in real life, you understand that it's a part of the game. I'm not saying it's not gonna hurt, but at least you can understand why it's happening. And that's just the way the market is.
100%, 100%. Now I'm on your website right now, and I'm looking over your trade logs, and I just want to highlight how January you had a superstar month, and then February and March hit. There's pretty much more losses than there are wins. However, what I want people to see is after those months subsided, after you realize your mistakes, look at April, look at May, June, July. There's three
Exactly.
losses per month. So you went through 2 whole months of red before you adapted to the current market behavior. However, a lot of traders, they'll go through one red week and, give up or try to change their trading style, which just in turn, makes the process that much longer for them.
Yep. And the thing with that is the problem is a lot of the problem is back to just the media in general, because everybody wants to be that millionaire overnight. Everybody wants to drive the Lamborghini. But, a lot of those commercials, a lot of those ads, a lot of those people you see are just not telling the truth. It's not the truth. Maybe once in a blue moon, you can have someone that gets rich overnight. But this game is a longevity game, and it's a game of taking your losers when you have to and taking your profits when they're there. And you really have to look at things in the bigger picture. If traders would only, actually, I have a great story about that. So I have a student. I don't take much students anymore just because I'm really busy. But she's in a real estate. She's a real estate, she owns a real estate firm in Texas. And basically, she's, a little bit older and she wants to learn how to trade. So I started teaching her and just saying, focus on the numbers, focus on the risk reward. And just as an example, she had 100. So she trades a lot. So she had 156 trades in 1 week. And she only won like 65 out of those trades, and she made a profit. So it's not, yes. So as long as you focus on the numbers game, you'll be fine. And when I look at her log, I actually shared it on my YouTube the other day. You'll see like there's a lot of losers, there's losing streaks. But what you notice about those losers, they're all a fraction of the winners. So let's say she lost $100 on a trade, but her winners are like $200 or $300. So as long as you keep that in the back of your mind, you'll succeed.
Right. Now, I want to build off of that with some personal experiences that I've actually had this past week and this month, this year in general. That whole losing streak you had in February or March, around March, I had over $200,000 loss on a Friday just because, this was during the time everyone was going crazy on Lotto Fridays. Me personally, my play style prior to this, I just prefer not to play on Friday. There's not that much volume going on compared to earlier in the week. And, 0 days till expiration has a lot of risk, which I am personally not comfortable with. So after I realized that loss and it took me back, I said, okay, wow, I just undid more than 2 months worth of work in one single trade or one single day that, affected me huge. So going from there, I realized, okay, well, I can still participate in Lotto Friday. I just have to adjust my risk so that whatever I lose just does not affect me. And that's what I've been doing consistently ever since. However, a lot of members that join services such as mine or yours, they don't understand that our risk is very different. If I'm taking something to, let's say, a support level that will result in a 50% loss or a 40% loss on that position, I'm taking it to that loss because my risk tolerance allows that. I'll still be safe on my portfolio if that happens. However, other people will use our risk tolerance for their exits. So it's really a matter of you have to sit down, you have to realistically see what is attainable with your portfolio in terms of both profits and losses, and most importantly the losses, since you can't really control the profits.
Yep. And what I tell, sorry, the rain is coming down really hard. You know how Florida is crazy over here. But anyways, I tell new traders the easiest way to do this is whatever you put in an option play, assume it's going to go to zero. And then if it does go to zero, is that going to hurt you? Is that going to hurt your account? Is that going to make you to the point where you can't trade anymore? If the answer is yes, then you're sizing too much. You're sizing too large. So as a general rule, let's say you have $1,000. You shouldn't be risking more than, $20, $30 a trade. And for some people, it's not going to work because you can't even buy contracts with that, right? And if that's the case, then what I suggest is going actually to the micro future contracts, because you can trade micros with $5 a point. So you could trade with $1,000 or $2,000. But if you can't do that, then you shouldn't be sizing that way, because if you have a few trades, you could basically just wipe out your account. And once you don't have an account, you can't be in this business anymore.
Right, right, 100%, 100%. We've been having, luckily the market has been making new all-time highs, so we've been having quite a enjoyable profit returns in the market for everyone. However, some weeks, such as this week for me, it was a red week, admittedly. Um,
Hmm.
you know, if I'm having
Yeah,
all these
definitely.
wins and I run into one red week, and then
Mhm.
I have members that are complaining, oh my God, this red week, what do we do? Well, first of all, a red week and a green week should both not affect your portfolio at all. No single position should, make or break a portfolio. And that's the hard lesson I learned back in February.
Yeah,
However, you know, no matter how much we keep saying these lessons out loud, traders will always either forget or choose to ignore for the potential of a multi-bagger. And I just want to say that there's only so many times that you can keep going through the cycle of small wins or decent wins and huge losses that give you a huge drawback on your account. You can only go through these so much before you're completely out of the game, like you said. So the
100%.
sooner you
100%.
realize it, the sooner or the easier you'll have a time in the
Yeah,
market.
and people might wonder like, why am I still CPA? Like, why am I still doing this? And that's exactly why. It's trading is not 100% um going to be like a source of income. You're not going to win every single month. You're going to have losers. And I make a lot of money as a CPA, and it's my career. It's something I put 10 years of my life into, and I prefer it this way. This helps me take the burden off of my trading because I'm not trying to pay my bills through my trading. I mean, I could pay them, but I don't want to. Any
100%.
money that I make in my trading account is reinvested in my trading account. And I think that's one of the things that really helps my edge is that I'm not dependent on it, whereas a lot of people want to be dependent on it. But to be dependent on it, you need to get to a stage where you've been consistently making money for a few years
Right.
before you even decide to make that decision. And as long as, like, the way that trading is, you don't have to sit in front of the screen all day long. You don't have to do that. Like, I automate my trades on the weekend. And when I'm doing day trades, I put my trades in the night before because I know exactly what I'm looking for. And it doesn't really take that much time. If you try to stay automated, you could still do your 9 to 5. And I think that helps me. And I think it'll help a lot of traders also, just by not having to be so reliant on their trading account to go to $1 million in order for them to, to consider that a success.
Right, right. And I want to build off a little bit. A lot of people will get to that whole mindset of I want these trades to, pay my bills, to be my income, before they even develop a trading style that's profitable. They'll go into trading with money they can't afford to lose, which I think is the key component of driving people to psychological failure within the market.
Oh yeah, and one thing I want to talk about is that, trading might seem like, this great grand thing that can change your life. And trust me, it definitely is. But on the flip side, I've had a lot of people actually call me or DM me sharing some horror stories. Sharing stories like, they want to kill themselves, they want to commit suicide, or they lost their marriage or whatever because they lost millions of dollars in the market, or they lost hundreds of thousands of dollars in the market. So I think this conversation that we're having here is very important for the community because we need to be transparent about the risk, and we need to be honest to ourselves of what's realistic in this game. And for some people, if you have the wrong expectation, I don't. It could lead to other issues in your life, and it's so important to have the right expectations from the beginning.
100%, 100%. My mentor, the Equilibrium, he always tweets the whole live, preserve your capital so you can live to trade another day. And a lot of people don't understand that, this market is never ending. There's countless tickers, countless days, and countless opportunities ahead, of course. And you will always have an opportunity to find the next, huge winner. As traders, you and I, we see these returns on a weekly basis. There's at least 20 multi-baggers per day. You're not going to catch them all, but eventually you can if you manage your risk and stay in the game long enough.
Exactly, exactly. And That's the most important thing, is just making sure your business is always open, because in trading, our customers are tickers, like they're either going to make us money or lose us money. And if the moment your doors are closed, that's the moment that you can't take advantage of those opportunities. So always have that capital there and preserve it to the best of your ability so that you can continue to operate. And if you can't, for some people, they're never going to be able to come back to the market, because some people are taking loans and stuff to trade because they hear about, what's going on and people making millions of dollars and stuff. And, that's another thing, like what you said, don't risk money that you can't afford to lose. Don't
Mm-hmm.
ever do that. That
100%.
is something that can it could ruin your life, and it's something that could take many, many years for you to recover from.
100%. 100%. Now, while we're talking about psychological aspects of the market, um, I went over with the last interview we had. I mentioned how, experienced traders, they'll occasionally, or they'll usually have some type of lesson they've learned throughout the market that stuck with them and is just, to the point that it's scarred into their brain. What do you think the most important thing you've learned in the market that helps you sustain a consistent, profitable trading style?
So
Psychologically.
yeah, so psychologically for me, I always think of every trade as a coin toss. I don't care what the system is, what the style is, doesn't matter. Everything is a 50-50, and I'm flipping a coin, and when I'm right, I'm going to make double. That's what I tell myself. So that's the mantra that I have for myself, is that don't get attached to anything. Do not get attached to any trade. Do not marry any trade. Everything is a coin toss. And as I continue to trade, I keep reinforcing that, because let's say I have like five, or what picks do I have this week? I have like Square, Apple, Microsoft, etc. So I might think that, hey, Apple is going to be the one. Like my gut tells me that, right? But next week, it might be, one of the ones that I didn't even consider, let's say like Square, and that becomes my big winner. And that helps me to remember that everything in the market is a coin toss, and it doesn't matter about how you feel about a ticker. It doesn't matter about what your thoughts are or what the news says. At the end of the day, you just have to play the game, and you have to manage your risk, and you just have to take the trades that fit your criteria, and and basically just be open and be unbiased.
Awesome. Awesome. Right on. Okay. So, with that being said, that whole 50-50 aspect, at what point do you, say to yourself, okay, I'm right? Because obviously we know we can identify a loss by hitting our predetermined stop loss, but at what point are you saying, okay, this trade has enough momentum, or this trade
Mhm.
is gonna, take me to my double win?
So I use risk multiples in trading. So basically, like what that means, I learned that a long time ago. So if I'm risking $100, then my first risk multiple is going to be $100 in profit,
Mm-hmm.
right? And the way that I determine my risk multiple is I use basically 1 to 2% of my capital, and that's how much I'm willing to risk. So if it hits my stop loss, then I know for sure that I'm going to lose, let's say, $500. And then I know if it hits the first target, which is going to be 1R, which is basically the same distance from my entry to my stop, I just project that to my first target. And I'm going to make 500. So what I do is I use a scaling out approach for me. I like that one because I'm always like partially in a name, because it gives me, like, I don't want to get FOMO. So that's how I deal with FOMO. So basically, when I hit the first target, I take off about half of my position, and then I keep scaling out. So then the next one will be like 1.25, and then 1.5. So like when I'm at 1.5, then I'm gonna scale out a little bit more. And I just do that based on, like, the first 50% I have to book it, and the other 50% I just play it based on how the chart looks to me. And then from there, I move my trailing stop up. So once I get over the 1-to-1 target, my stop loss can go to break even. And once I go to break even, that gives me confidence to just let it run as long as it can. And I just like to trail the weekly bar lows, if I'm long, for example, and if I'm short, then the weekly bar highs.
Gotcha. Gotcha. Pretty structured. Now that we went through the psychological approach of the market, I always ask my guests on the interview show, whether they can give a long-term and a short-term outlook of the market. However, I want to switch it up a little bit for you, since everyone does SPY and whatnot. I want to ask you three sections: tech, financials, and travel.
Got it. Okay. So actually, I'm in a lot of tech and financials. Not really travel. I don't really watch that too much. But for tech and financials, did see at the end of the week last week that there was some rotation into the financials. And overall, with those tech and financials, I look at it very simply. So if I'm a long-term investor, like, so I have a long-term account, that's a separate story, but basically I use a dollar cost averaging approach for that. So if I'm holding something for, so, next 10 or 20 years, tech and the financial sector, I'm just buying dips, and I don't have a stop loss. Simple. That's for my long-term. I put that in a tax-free account, let that go. But in terms of overall, I really feel that we've had a crazy run in every sector pretty much since the COVID crash. And from my years of trading, at any time, there can be a correction at any time. And no one knows when it's going to be. And I'm not going to claim that I know, because I have no idea. But when it does come, it happens very swiftly, because the bears always take the elevator down and the bulls take the stairs up. So, and it could be anywhere between a 5 to 10% correction, even more. But those times when those bigger corrections come in, I'm looking for ways to add to my long-term investing accounts and my tax-free accounts. But in terms of a day trader or swing trader, I'm always willing to adapt. And once I see a confirmation for, let's say I see an inside bar in the weekly, and I can always take that short, right? So I always do actually have hedges on in my swings. So what does that mean? It's like if I have 10 picks, 8 of them will be long and 2 of them will be short. So that's kind of how I deal with that. Because I'm being honest with you guys, I don't know when the correction is going to come or if it's ever going to come. But I rather have some short positions on to protect me in case it does come. But definitely, I would say overall, my outlook is the market's had a huge run. And anytime there's a huge run, there's always a chance for correction, because once things start selling off, it's like a chain effect, because institutions will also get out. Stop losses will be hit on the way down. And it sometimes is very swift. And that's what we saw with COVID. We had a news catalyst, and then we just went straight down basically for like good 2 weeks. So that's what I see. And I don't really like to predict per se, because I know that everything's like a coin toss at the end of the day. But if there's a big correction, I'm ready with my long-term accounts. And if I need to adapt and add more swing trades that are in the short position, for example, I'm always willing to do that. But yeah, just overall, the market's had a big run, a big run, like that it's a V bottom basically, and that could go 2 ways. If we either just continue to squeeze higher, or we can have a pullback. So I'm just waiting to see, what's coming. But for now, most of my positions are still long, because that's the overall trend right now, right? Everything is just making new all-time highs. And until that music stops, I won't adjust my plan.
Okay, gotcha. So before we end the interview, a couple things I want to review. I want to highlight that whole automated aspect of your trades. Would you say that your trades being automated actually helps you stick to your emotional rules, because you won't have that human interaction in between the trade where you'll say, okay, well, maybe you can turn around. I'll go ahead and leave it for a few minutes and see how this next candle plays out.
Oh yeah.
So you would say it helps.
Oh yeah, because here's the other thing too. Sometimes when we have a weekly breakout, let's say as example for Oracle. So if you look at the Oracle, the breakout on the hourly chart, for example, if I don't have stop limit order basically means like when it pierces this price, fill me right away. If I don't have those orders, I'm going to miss the move. Because it's like physically impossible for me to sit there, watch the chart, and if a big breakout comes in, I'm not going to be able to get in. I'm going to get in late, and that's going to screw up my whole plan. So I like that. I mean, obviously it's a double-edged sword. Like sometimes, because I use automated orders, I get in and it might reverse on me right away. But at the end of the day, the way that my life is structured, if I don't have those, I won't be able to actually enter the trade, because I don't have the time during the day to actually sit there and monitor every single ticker. And sometimes, as an example, I have like 30 or 40 positions on in my account, and it becomes overwhelming. So if I don't have the automated part of the trading game there, I won't be able to actually do all the trades that I do, because it's just like physically impossible for me to watch 30 names, for example.
Okay. Okay. Makes perfect sense. The only aspect that I'm still on the fence about automated trades, and the reason why I personally stay away from them, you know,
Mm-hmm.
we're different individuals. Automated trades work great for you. Maybe I'm just cursed with technology, but every time I do anything automated, stop losses, any of that, they just, trigger within seconds. That whole reverse aspect that you were talking
Yeah.
about.
So you're talking about the options, right, brother?
Yeah. Of course.
Yeah. So for shares, automated trading is a lot easier, right? Because you're not going to have like big whipsaw P&L percentages like, oh, you're up 50, then you're down 50. So I found that same problem with options. So what I do is, if I'm swinging, like let's say I want to get into Oracle calls for like the next few months. So what I put in those calls, so I use something called conditional orders. So basically, when it breaks this price, fill me at the market price of the option contract. And what I do with that is, I basically am accepting to have between a 50 to 100% stop loss on the option, because that's the only way that I'll be able to keep it from an automated perspective, be in the trade long enough. If
Right.
my stop loss is too tight, it's going to get triggered,
Right.
right? And then when I'm playing Lotto Friday, everything is 100% risk.
Right.
So like when I'm in something, it triggers and it fills me, and that's it. I don't need to stop there, because let's say I put in $200. If it goes to zero, it goes to zero. So that's how I get around it from an option perspective. But if you're doing shares, those automated tradings work like a charm.
Right. Makes perfect sense. Well, before I
Oh,
let you
one
go,
more thing, brother.
uh-huh.
Even though I don't do this, just in case anybody's wondering, you can do a conditional order on your option contract based on the stock, right? So let's say you want to say, let's say, I don't know, say you take Apple at $100 and you want to stop out at $90, but you don't want and you're using option contracts. So you can say, only stop me out on this contract if the Apple shares drop below 90. So
Mm-hmm.
that can also help you to stay in the game, and follow your plan based on the actual stock itself.
Right. Okay, right on. But people do need to acknowledge that you've just highlighted it, that when you do use conditional orders on options, the stops that result in this are around 50% or
Oh yeah.
so.
Oh yeah, for
Right.
sure. Like as a day trader, like in your case, you have an edge in the sense that you can flip whenever you want,
Yeah.
right? Let's say you want to take a 10% stop, 15% stop, and you can get out. That's the only way I think you can actually do that is if you're sitting in front of the screen.
Yeah.
Um, but if you choose not to, then you got to have a wider stop. And if you want to take on more risk like that, like what I'm saying, 50 to 100%, just cut your size in half,
Right.
right? So let's say you're normally trading with $200 on an option play, just do $100. And that's a way that you can get around all the risk part of it.
Right. Completely agree. And I tell people a lot of the time, once your position is smaller and you essentially don't really care about the money that you put in, it's so much easier to follow both your emotional rules and your predetermined game plan that you've thought of the night before.
100% agree. 100%.
Well, before I let you go, I know you talked about your book. You have a service, you have a website, you have a YouTube channel. Please let the people know where they can find everything, what everything entails, what includes. Just take the floor away, please.
Thank you, brother. I appreciate that. Okay, so this is how it works. So every single day, I post option picks for the next day. And that's based on my scanner and based on me handpicking the names that I want. So anyone can use those names for free. There's nothing attached to that. I have my free TradingWarz golden indicator. So what I suggest is you get the indicator, put on your chart. On TradingView, I also have it for Thinkorswim. Put on your chart. You don't have to use it, but it's good to have it there as a reference. And then every single day I have those picks. So that's basically like the free part of my site. Like I always try to do something for free for everyone. So that's the free, like you don't need to use my service to make money. You can come, you can use the picks, use the indicators. I have a YouTube tutorial on like how to trade inside bars and outside bars for free. Just watch that and you'll be good to go. You'll be golden. And then I also on the weekend, so Friday, Saturday, and Sunday, I post swing picks. So like, okay, I just go to the higher time frames. I look for weekly setups and monthly setups, and then I post that for everyone. In terms of my service, this is how it works. So the swing room is basically my fundamental room, and I post setups Friday, Saturday, and then we basically just set the orders in the broker and let it go, and we just let it do its thing during the week. And I have alerts that I provide, like real-time alerts on my private Twitter and on my Discord. And for the swing room, so you can follow along, but technically you don't even need to follow along because you could just put the orders in the broker and just let it go. And I love that for people like me that are, still hustling out here. And then the recent new addition that I added was I actually had a friend that helped me to integrate the alerts to come through my Discord for the day trades. So for example, let's say I picked space, right? On Friday, that was one of my picks for Friday, Lotto Friday. So now every time on the 5-minute chart that space has an inside bar, it's going to actually come up in Discord from my bot. And it's going to be like, oh, space, 5-minute inside bar. And then from there, it basically brings it to your attention. So then you can do what you want to do, like long, short, whatever, depending on
like
the
an
strategy.
intraday scanner, essentially.
Yeah, exactly, like an intraday scanner. But it's only based on the picks that I posted the night before, because basically I'm trying to achieve like the fractal nature of trading. Like, oh, we have a daily inside bar and a 5-minute inside bar. Oh, like basically that's what I'm trying to do, because I love that type of trading because it's just very systematic and it's easy to execute. So basically, like, I was going to do a separate day trading room, but I said, just forget it. I'm just going to put everything in one. So if you join my service, $50 a month, you get the swing setups and all that, and then you get the alerts in the Discord. And I think it's very fair. I really, really do. I'm not trying to rip anybody off out here. And it just, I think it's a great opportunity. The other thing that I do is I have my book. And my book, I've sold probably close to 1,000 copies, to be honest. And it's an ebook, and it's all about fibs. And I have a section that I wrote recently about options. So how to basically use conditional orders with the fibs and the options to get, good returns and good risk to reward probability setups. And basically with the book, if you buy the book, you automatically get 1 month for free in the room. So I think that's, most people do that. I think that's pretty cool. And a lot of people, what they do with the book is they buy the book and then they tell me, hey, I want to start 2 months from now. And that's fine too. So I actually prefer that. Buy the book, read everything, study, get yourself ready to rock and roll, and then come into the room. Just let me know whenever they want to use their 1 month. And that's what I've been doing. And to be honest, that's why I'm growing, I feel, because I'm trying to be fair and honest with everybody. And there's something for everybody, whether you're a day trader, whether you're a swing trader. And yeah, brother. And I just want to say, thank you for allowing me to say that. And I really appreciate it. And by no means am I saying anyone has to use my service at all. I don't care if you do or not, but I just care that you protect your capital. And you can always just stay on my free channel and get the free picks. And actually, one more thing, my younger brother, he's helping me to create a few other channels on Instagram because I don't have the time anymore. But basically, like, for example, let's say you only want to trade the double inside bar pattern. That's it. So I actually have a new channel, TradingWarz Double Inside Bar, where basically it just finds those picks and posts them for free. So no charge at all. So I'm just trying to find ways to add more value to people. And that's one of the ideas that came to me recently. And I'm trying to implement that going forward.
So I've been trying to pull up everything you've been describing so the viewers can see exactly where they can go.
Thank you so much.
For the TradingWarz Inside Bar channel, is that on YouTube?
The alerts or?
Well, you just said you made a separate.
Those are Twitters. Those are all
Twitter.
Yeah,
gotcha.
yeah. So one is TW-IB and the other one is TW Holy Grail Pro. So the Holy Grail pattern, I basically, it's an outside bar and inside bar. I call it the Holy Grail because basically the outside bar traps the bulls and the bears and the inside bar consolidates. So I really find a lot of success using that one. So I named it the Holy Grail. But yeah, and my brother is running those, and I review all of his picks and make sure they're all make sense. And he's going to be doing that. And, it's just really about changing lives every single day. Change lives. If you can't afford it, that's totally fine. Use the free stuff. And at the end of the day, I'm trying to give people structure. If you only trade double inside bars, if you only trade inside bars, if you only trade the holy grail pattern, at least you have some type of structure so you don't end up chasing things, or like you don't end up confused, because there's 100 million patterns out there. So I just try to keep it as simple as possible for my followers.
Right on, right on. Well, yeah, man. Of course, I do these interviews because the people I interview, I value you guys really highly. You know, what you do for the community is insanely appreciated, especially when you're doing so much for free. And I mean so much. You're tweeting, 10, 15 times a day, and they're all, posts that add value. You're teaching, you're giving, free trades and all that. So I can only imagine.
Brother. That made my day. Thank you so much. I mean, sometimes it's hard for me, man. I'm gonna be honest. Sometimes it's hard for me. Sometimes I do like 75, 85 hours a week, man. And just hearing this from the community and validating what I'm doing, brother, it means the world. So thank you very much for that.
Of course, man. Of course, I totally understand what you are talking about. Solid 80 hours a week of work with the service. I can only imagine the type of content you put out for your paid members if this is what you're doing for your free members. So again, greatly appreciated. You're a great resource, great guy, and I'm really looking forward to seeing what you're going to bring in the upcoming years, brother.
Thank you, bro. And one last thing. I don't think I mentioned this, but I have a YouTube channel, and we just broke 5,000 subscribers. Every Sunday I do a oh, you got it there. Perfect. Every Sunday I do a Sunday stock talk, which is basically like preparing you for next week. We look at picks and all that. And I'm starting to try to bring in people on my Sunday stock talks to host it with me. And I want to get you on that, brother, one day when we can arrange some time. But actually today is the first time I'm bringing someone on. Jeremy Newsome from Real Life Trading. He's one of my mentors, I would say. I know him for a long time. And yeah, so that's going to be at 8 p.m. tonight. So if anybody's interested, they want to tune in, come by. We're going to start off with education on how to trade gaps, and then we're going to go into stock picks for next week.
Beautiful. I'll be there, man. I just went ahead and subscribed to your channel. And you said 8 o'clock. Is that Eastern, Pacific?
Yes, sir. Eastern. Yep.
Eastern. Okay. So 8 o'clock Eastern, 5 o'clock Pacific. I'll be there, and everyone viewing this shit as well.
Thank you. I'm excited. Come, man. Let's have a good time, and let's just keep focusing on changing lives. That's all I care about at the end of the day, because it's all for me at this point. It's about having a legacy, because I make good money. I make good money in trading. I make good money outside of trading. It's about having a legacy, about changing lives. And it's also about me remembering when I first started trading, how hard it was. When I first started trading, I got scammed by people. When I first started trading, it was all confusing. I couldn't sleep, and I woke up at 4 a.m, look at the futures chart. And I know a lot of guys are doing that right now. So I'm trying to change that narrative. Trading can be simple. It can be very, very simple if you have, a systematic approach, and if you take the emotions out of it.
100% agreed. 100%. Well, that being said, again, Richard from TradingWarz, thank you so much for being on this interview. We all greatly appreciate it. I've gathered a lot of information, especially from your inside bar setups. I'm going to be looking out for consolidation patterns going forward for my setup. So, again, some confluence there.
My pleasure.
Yeah, of course, brother.
And you know what, brother? I'm gonna send you a copy of my book. Just take a read at it, and I'm actually gonna do some giveaway. I'm just feeling like let's just do some giveaways tonight, because I just realized I broke 20K on Twitter and 5K on YouTube. So let's do some giveaways tonight. Give away some books. Give away some memberships, and please come by and ask any questions or anything, man. I love having traders there. I had Davis Trades the other day in there, and I had oh my God, I forgot his name. The guy with the Bruce Lee pick, Yassine was in there the other day. Mm-hmm. Yes. So the more the merrier. So thank you very much.
Awesome, brother. Awesome. I'll see you then.
All right. Have a great day.
You too, my man. You too.